October 30th, 2024. A lot of times the market repeats patterns, and today we repeated a pattern that we had yesterday on the open. Yesterday, we had consecutive bear bars and then a bull surprise after a gap down, and it ends up being the low of the day, and you get a good looking rally out of it. Today, it's obviously a little bit different. We have three straight bear bars, but I think the same concept or still applies where you get a gap down and then some sort of sell climax and a bull surprise, which is a very possible low of the day. Obviously, at the very end of the day here, we ended up trading below this bull spike, but in general, it's okay to assume that this is probably the low of the day, the same way this was probably the low of the day at that point. Bar one, a bear bar, but a large tail on the top and a tail on the bottom as well. So after the gap down, it is follow through for the bears, but they're probably going to need to see more if we're going to go a lot lower. Bar two, consecutive bear bars. It's good for the bears. We're probably going at least a little bit lower, but we are pretty far below the moving average. You also have to keep in mind, if you just looked at a higher time frame for, I was looking at the daily chart. On the daily chart, the market was not all that bearish. So it would have been a surprise, a pretty big surprise, if we got a large bear trend day today. The Globex daily chart, which is what I personally choose to use, has not had a close below the moving average in 35 bars. So what are the odds that we're going to get a large bear trend day today? They really weren't all that great. You also have to keep in mind, on any given day, the opening move has a 50% chance of just being a climax on the open, so a sell climax or buy climax on the open. And this is, a possible candidate for a sell climax on the open. So as good as it looks for the bears that, we might be going lower, you can't really be all that sure. A lot of times when you get these sell climaxes on the opens, you get inverted measured moves. So you'll get a measured move up of bars 1 through 3 instead of a measured move down. You can see we did end up getting the measured move up into this area and created a small ledge. It's only a 3-bar ledge, 10, 12, 14, so not as important as a 4-bar ledge, but still an important magnet. Bar 4, a bull bar. So micro double bottom, 3, 4, and a bull bar. That's pretty strong on bar 4. A tail on the top, so not as good of a buy as it could have been had it been an inside bar. And a tail on the bottom as well, but that's not obviously as big of a deal, creating the micro double bottom. So bulls want low of the day, micro double bottom, and to buy for a swing. And the bears are hoping for is just a pullback from 1 through 3, but it's probably not. We're probably going to test back to the bar 3 close at some point, but you don't know when that could be. This is a prime example of that. If you're shorting below 3, you're selling the close of 3, let's say, basically betting on it getting a second leg and that we're going to get back to the close of bar 3. It's not necessarily wrong to do, but you need to have an uber wide stop if you're going to take that trade, because look at what happened. So you can't really sell the close of 3 and put a stop above 1 and then just let yourself get stopped out. That's really not a good thing to do. If anything, you need to have a really wide stop and be scaling in. But, maybe, I don't know, some sort of measured move up, something like that. But even then, how confident are you in your trading abilities that if you sell this close, you're going to confidently sell more here, maybe confidently sell more somewhere up here? Probably not that confident. I think that most likely what would happen if you sold this with a really wide stop is you'd scale in too soon, get caught in this rally, and basically panic out because you don't want to take a full loss, only to basically watch the market go sideways for a bit and then come back down to the area you expected it to. 5 consecutive bull bars, so 4 or 5 good-looking bull bars. Again, it's possible 1 through 3 is a bear trap, so the bears who were selling for any reason, buying back shorts, 4 or 5 consecutive bull bars closing near their highs. You can buy the close of 5. Some bulls prefer to wait for a close above the moving average, so 6, 3 consecutive bull bars with at least one closing above the moving average. We are always in long at this point. We were always in short, basically with the gap in bar 1, but again, possible vacuum test. One of the really easy ways to avoid getting caught in these vacuum tests is just don't trade the first 4 or 5 bars of the day, or 6. I generally don't trade the first 6 bars of the day because this is a prime candidate of what can happen. You can get caught really early with a big loss, and a lot of times it's just not worth it. If you look at your winning trades, most of them don't come in the first 3 bars of the day. So for me, I just prefer to wait. 7 consecutive bull bars, 6, 7 above the moving average. 4 through 7 is 4 consecutive bull bars. Good for the bulls, right? This is a really strong 4 bull bars, and it's going to get a second leg. The only problem is we're kind of towards the top of the trading range. You can see this area has been resistance for a couple of days now, and it's probably going to continue to be resistance after what happened today. So I think already did 7. So 8, bull bar, but a tail. So what do you notice about bars 5, 6, and 7 that's different about bar 8? What you should notice is that bulls more or less bought immediately on the close of 4. There's a very small tail, but they pretty much immediately bought. They bought so eagerly on the close of 5 that we gapped up on the open of bar 6, and it didn't even overlap. So if you had set a limit order to get filled on the close of bar 5, you would not have even been filled. So really a lot of aggression buying here. The bulls buying the close of bar 6, a very small pullback. And then all of a sudden on bar 8, we get a deeper pullback, which means that bulls were more interested in buying the pullback than they were necessarily in buying the close of anything. Again, that's not necessarily a bad thing for the bulls. Well, I mean, it means we're probably going to pull back soon. However, you still have to be expecting a second leg up from the rally from bars 4 to bar 8. So as you know, you can look at it and say, yeah, it pulled back, but also again, we're going to get a second leg sideways stop. So there's not really a reason to exit. 9, a bear close, but really just a doji bar. Probably sellers not too far above, but we're in a bull micro channel from bar 4. So there's going to be buyers below if we go below anything here. 10, another bull bar, but a tail on the top. We have a rally from bars 4 to bar 10. Good for the bulls, probably going to get at least a small second leg up. And you know there's going to be buyers below the first time we trade below a bar since it is a bull micro channel. 11 trades below bar 10, buyers below as expected. The bears probably need, going to wait for the market to go sideways and get a couple legs sideways before looking to sell. 12, you can see bulls more interested in buying around the 10 low, 11 low, and that's part of what causes the rally on bar 12 to around the close of bar 10, and some traders exiting around that area, causing the large tail on bar 12. 13, an inside bar. It's a high 1 buy for the bulls. The thing you have to keep in mind whenever you're buying a high 1 is that it's usually going to pull back. So are you going to buy above 13 with a stop below, 12 or 11? No, it doesn't make sense. If you're buying above 13, you probably still have to have a really wide stop below 3. So it's really not as good as it could be unless you're trading really, really small and you're willing to scale in. So tight trading range so far, I'm going to close at bar 13. 5 bar tight trading range, bar 9 through 13, but still always in long. We also have an open gap. Sorry for the background noise. I shuffle poker chips sometimes, and if there's clicking in the background, that's what it is. So bar 1 and the bar 7, or the bar 1 high and the bar 7 low, there's an open gap here. So a bear, you have to ask yourself, if you were a bear and you shorted above the bar 1 high, willing to scale in, do you expect yourself to make money? Yeah, you're most likely going to make money. So the question becomes, are we going to get back to that bar 1 high? If we do, the bears are probably going to buy back their shorts and we might get some sort of bounce. And if we don't get back to that high, then bears are pretty clearly trapped in the trade. So we might end up getting even more of a rally there. 15, an outside bar. Good for the bears to get an outside bar, but consecutive dojis, 14, 15, probably going a little bit higher or a little bit lower, but then probably going to reverse back up. We still do need a second leg from 4 through 8. So you do have to be wondering when we're going to get that. It's not just going to forget about that really strong bull move. 17, another bear bar. So we have 3 straight bear bars, 14, 15, 16. Some bulls will just exit on the close of 16, basically thinking that we're going to get a second leg sideways to down. And that's what causes 17, the really big bear bar on 17. 18, a bull close around its midpoint. Sellers above 17 most likely should get a second leg sideways to down from the sell-off to 17 and back to around the bar 1 high. Large tail, like I said, on 18 and sellers above 17. 19, an inside bar. It's a high 1 buy for the bulls, or you could argue it's a high 2. Either way, probably buyers below, probably sellers not too far above. If you're going to take the buy, you probably still need a pretty wide stop. 20, another bull bar. 20, a bear bar and a tail on the bottom. We're probably going to get back to around the close of bar 17 at least, because 14 through 17 is going to need a second leg sideways to down. 21, consecutive bear bars, but a wedge. 11, 17, 21. And if you're selling 21, you know that there are bears who sold above bar 1 and have scaled in and want to get out. So if you're selling here, you're selling right into support. So really not a very great area to be shorting. And then you get a reversal up, 22, a bull bar, but a large tail on the top. It is a high 2 for the bulls, and we do have a good looking, reversal up, 18, 19. But I'm not sure how much further up we are going to go here before we start to go more sideways. The pullback was deeper than the bulls wanted it to be. And realistically, if you were betting on a bull trend, you probably wanted the gap between the 1 high and the 7 low to stay open, and it didn't. So I think that's a pretty big problem. 23 consecutive bull bars, 22, 23. We should get back to the bar 21 close at some point today, but good for the bulls, 22, 23 consecutive bull bars. We still are always in long. And if we are always in long, bulls can buy it for any reason. So they can buy the close of the bull bar. 24, a really large bull bar, but a pretty climactic looking bar, right? So we might go at least a little bit higher, and 22 through 24 is definitely going to get a second leg sideways to up. But the question becomes, how much higher do we go? I don't know if we got some sort of leg 1, leg 2 here. Maybe leg 1. No, we did not. Okay. I'm sure they're all over the place on days like today, though. Leg 1, leg 2s are very common. Looked like we were trying to get one there. Possible this whole thing. Hold on. I'm going to mess around with this for a minute. This whole big thing, somewhat of a leg 1, leg 2. We got pretty close to the leg 2 target there. So leg 1, pullback, leg 2. It was an endless pullback day today. So anyways, I think I was on 25. So 25, double top bear flag. Bears, they want a double top 15, 25. In general, double top bear flags, 40% chance you take the short and you get a measured move down, a breakout below the neckline and a measured move down. 60% chance you don't get it. And when you get a double top bear flag, 30% of the time, the second leg up, like the move from 22 through 24, is a buy climax like it was here. So 25, a bear bar closing near its low, 26, a bull bar closing near its high, 3 straight bull bars, 22, 23, 24, and then 26, bull bar closing near its high. High 1 buy for the bulls, hoping bears trap 25 and now bull trend, but a little bit less likely. I think probably we're going to go a little bit more sideways rather than straight up. 25 is disappointing for the bulls. They probably shouldn't have allowed it. They probably should have gotten a good-looking bull follow-through bar from 24 if we were going to go a whole lot higher. 27, another bull bar, but a large tail on the top. So although we probably should still go at least a little bit higher, I'm not really sure how much more is left to this move. 28, an inside bar, a high 1 for the bulls. Probably sellers not too far above, probably buyers not too far below. 29, another bull bar, but again, a tail on the top and a tail on the bottom. So again, third leg up, 22 through 24, 25, 26, 27, and then 29. 3 legs up for the bulls. It's possible that the first leg was 4 through 8, and then we got a pullback, and now we're getting a wedge rally as the second leg up, so 1 pullback, 2. 20, so 30, a bear bar, probably a minor reversal, but this is starting to look like a trading range, and this is 3 legs up, 1 pullback, 2 pullback, 3. So probably, although probably buyers below scaling and lower, it's probably better to just be flat. If you were long here, so if you are long here, I took 2 trades today, by the way. I'm just more emphasis on the leg 1, leg 2 type of system thing. I bought the close of 7 and I held through this, and then I ended up pulling my stop here, and I basically sat through this entire thing, and then I got out during 48 below 22 and took a pretty small loss on that. And then I sold the close of 49 for a second leg down, measure move down here, and ended up making money on that trade. So I was 1 for 2 today, but my win was obviously much bigger than my loss. So I ended up doing pretty decently today. But the thing I wanted to say about that was that once we got below this lower high, actually, you know what? I'm gonna wait till I get there, because I thought that this, if we broke below 22, odds were increased that we were going to get some sort of sell-off back down into this area, because it's a trading range day. And since we're getting this higher low here, right? This is a higher low for the bulls. We should be getting continuous higher lows in a bull channel if this is going to be a bull trend day. But instead, you break below the higher low. Now there's an increased chance that we get some sort of measured move down, since this is a trading range day. And in trading range days, gaps close and magnets get tested, and the 3 closes an obvious magnet. So now that we have a lower low, it's becoming a bear channel. So we have a leg up, and now we might get a leg down back into this area. I know I said I was going to wait until I got there, but I guess I just decided not to. 32, a bull bar or bear bar closing near its low. Some bulls will exit below 32, basically just waiting and taking a chance that we're not going to get a bull trend day. Bears can sell, basically betting it's 3 legs up, a wedge, 1, 12, and 29. 33 consecutive bear bars, 32, 33, probably going at least a little bit lower, but tails on both sides, really not all that good. 34, 3 straight bear bars, 32, 33, 34. 34 closes below the moving average, but probably not going all that much lower. The bears need another bear bar here, basically. And if they're able to get it, we're probably going at least a little bit lower. However, 35 being a doji bar is a problem for the bears. I think that if it decreases the chances of the bears getting some sort of strong looking sell off here, increases the chances we're going to go a little bit more sideways to down. 36 consecutive doji bars, 35, 36. But probably again a little bit more sideways here than down. But the thing is, I think we're going to go back down into this area at this point. However, you have to keep in mind it could take 2 legs. So first leg down could get a pullback and then a second leg down. So you can't be scared out by some sort of minor reversal. Sorry, I'm stuttering over my words a little bit today. I'm pretty tired. I was trading until basically the very last bar of the day today because my trade I had to stay in it. So 36 consecutive doji bars. Again, we're probably going at least a little bit lower, but I'm not sure how much lower. 37, a bull bar closing near its high or on its high, but I don't want to buy above 37. It's a high 1 in a bear micro channel. So it's a minor reversal at best. Sellers above 37. Disappointment 38 and a tight trading range. Any bull who bought the close of 30, 37, disappointed 38, using 39 as we rally back to moving average to exit their trade around break even. 40, an inside bar, a low 1 short, probably buyers below, scaling it lower. So really not as good as it could be to sell below, to sell here. But again, it could be a third leg, first leg down to 34, second leg 39. Then we might be getting a third leg below 40. So probably going to start to go sideways pretty soon. The buy climax low, 22, 23, 24, is around the 22 low, obviously. So there might be support there. 41, a bear bar, but again, we are always in short, but headed towards the bottom of the trading range. 42, consecutive bear bars. We're probably going at least a little bit lower, but I'm not sure how much lower. That's a third leg down. 43, a bull bar. It's 3 legs down, some sort of parabolic wedge, but the channel is really tight, so not worth selling. 44, an inside bar, a low 1 short for the bears. Probably more buyers than sellers below. And then 45, you can see buyers below. Again, we're towards the bottom of a trading range here. 46, an inside bar, probably sellers, again, not too far above, buyers, again, not too far below. It's the same thing that happened over here. I had a little note if you saw, but the bulls, basically, you can see they got 1 close above the moving average, and then they kept trying to get above the moving average. They couldn't. They got 60. They kept trying, and they kept trying to get above the moving average here. Basically, one of 2 things is going to happen in this particular situation. There's a reason I'm skipping here. I'm going to go back in a second, but the reason I'm skipping to here is because look at the bulls continuing to fail to get a close above the moving average. They keep getting bull bars, but nothing is above the moving average. At some point, the bulls are going to say, screw it, we're not getting above the moving average, I'm exiting. And that's usually below a bear bar. So that's why 66 is a credible sell. It's a low 2 short below 65, really not great, yeah. But you have to keep in mind that the bulls continue to fail at the moving average. And if they keep doing so, eventually they're going to give up. And they ended up giving up below 66, and that's what caused 67. Over here, again, the bulls, they kept trying to get a rally above the moving average, and they kept failing. If they could get some sort of bull bars closing above the moving average, it would have changed the day. But instead, they're not able to hold the higher low, and they can't get a close above the moving average. So 47, what happens? Bulls try again to get above the moving average, and they fail, and you get a bear bar closing near its low, a low 2 short. Yes, possibly the bottom of a trading range, but the context with the bulls continuing to fail, I think, overwhelms that, and that's why some traders will take the sell. Want higher probability? Wait for 48 consecutive bear bars closing below the moving average. Want even higher probability? Wait for 49, but you might have to sit through a pullback. 3 straight bear bars. Excuse me. Sip of water. So 48 bear bar closing below the low of that trading range. 49, 3 straight bear bars. We're probably going at least a little bit lower. 50, 4 straight bear closes. So we're definitely going lower. But the question is how much lower? 51, and I think, by the way, obviously the bar 3 close is a good indication of where we might go. So why did we stall right here? Well, obviously the risk reward became a lot worse. If you're selling the close of 48, your 1-to-1's only here, and your 2-to-1 is way down here. And you can see the traders who sold the close of 48 got 2-to-1 pretty quickly and bought back their shorts. For bears, it's really not as good as it could be once we start to pull back, because let me restart. Because of the risk reward is basically the main point, though. If you're selling the close of 50, your risk is really large and your reward is not as large, versus selling the close of 48, your reward is it's pretty big and your risk is not as big. Obviously, the trade-off is probability. 49, 3 straight bear bars, 40, 47, 48, 49, we're going lower. 50, 4 straight bear closes. Again, we're going to get a second leg down from this regardless of the pullback. You can see it's probably not a bear trend or a large bear trend by the fact that we pulled back to the bar 22 low. So a bull who bought the bar 22 low and scaled in lower during those was able to make money. 51, a bull bar, but a large tail on the top and on the bottom. Probably sellers not too far above, probably buyers not too far below. 52 consecutive bull bars. We're probably going at least a little bit higher. Probably going to get a second leg up, but not really worth buying that close, I don't think. Probably buyers below, probably sellers above. Outside down, 53. It does test the close of 50, and technically 53 and 54 qualify as the second leg, but I think it's better to just wait and see what happens. 54, an inside bar, it's an IOI pattern. 52, 53, 54. Probably buyers, again, not too far below. Low one short 52, not very good. And low one short 54, not that good. 55, a bull bar. For the bulls, for the bears, it's 2 legs up. So the sell off down to bar 50. First leg up 51, 52. Second leg up 55. And they're basically looking for some sort of low 2, low 3 short for a trend continuation. The bulls are hoping that this is a trading range and this is their second reversal up, maybe some sort of large higher low major trend reversal from the low of 3, but more likely that it's just going to be a minor reversal. 56 consecutive bull bars, good for the bulls, but a large tail on the top of 56. Some bulls will exit, or bears will exit above 56. However, you can see it never triggered on 57. So other bears will sell the close of 57, taking a chance that this is just 2 legs sideways to up, or 2 legs pretty sharply up, basically testing the bar 22 low, and then bears are going to exit below 57, causing 58. Bulls will exit below 57, causing 58. 58 consecutive bear bars, 57, 58, probably sellers above 58 during 59. And you can see any bull who bought the close of 56 disappointed, 57, 58, using 59 to buy back their shorts. They're using 59 to sell out of their longs. Sorry. 60, second leg down for the bears, 57, 58, 59, 60. But again, no closes above the moving average. And I kind of already went over this. You can call this pattern whatever you want. Yep, it's an inside bar, it's breakout mode, whatever. The really important thing here is that bulls got 1 close above the moving average, and they can't seem to replicate that. They keep failing. Eventually, bear bar closing near its low. What is the bulls going to do? The bulls are going to give up. The target is the bar 3 close, and not obviously, it's not the word I meant to use, but sometimes when you get a sell-off basically towards an obvious magnet was what I was trying to say. When you have an obvious magnet like the bar 3 close, sometimes the market will get kind of close to it and then reverse up trying to trap traders out. So 68 is trying to trap the bears out. It's a lower low major trend reversal, but usually a lower low major trend reversal needs a higher low before it can go anywhere. And quite frankly, this is not a very good looking bull close. So to me, it's not, you don't have to exit above 68. You can hold 69 consecutive bull bar, 68, 69. If the bulls can keep getting bull closes, then maybe we'll go somewhere, but this really isn't all that good. 70, another bear bar. And you can see we trickled sideways to down, another bull reversal, 74, again, around that area, and then reversed up, continuously trying to trap the bears out. And then you can see bear bar closing near its low, and we end up testing the magnet. And then obviously it went, market went a little crazy at the end of the day. I'm not sure why. I don't know if there was news. I don't really pay attention to that. So for stop out orders today, you could have sold the close of 2, but tough. You need to be quick to manage it. You could buy the close of 5 or 6 or 7 or 8. I would not sell. You could have bought above 23, maybe 26. Probably get out somewhere in here. Could have sold below 32, 33, 34. You could have sold, I thought 47 was credible, 48, 49. These are all sell to close. Deep pullback, and then you can sell 57. You could probably sell below 60. You could definitely sell 66. And that would probably be it for the day. Oops. The daily chart, I'm going to pull up that Globex. Okay, so yes, big sell-off, but the sell-off today was a channel, and channels lead to trading ranges. Good for the bears, and we might get a close below the moving average, but what do you think is going to happen with all these closes above the moving average? Probably when we get below the moving average, there will be buyers. So I'm expecting buyers somewhere down here. If we sell off tomorrow, don't be surprised if we get a sharp reversal. The weekly chart is an inside bar so far. We tried to rally back up. Let me zoom in a little bit. Tried to rally back up to around this close, and you can see we're failing. And then the monthly chart is really what's important, because tomorrow, I believe, is the final trading day of the month, right? Yeah, tomorrow is the final trading. That's not good. Tomorrow is the final trading day of the month. My hard drive's fine. It was failing a little while ago. But the open of the month is about 40 points below, which is very, very much in reach. So 58.07 is really important tomorrow. And yeah, I think that is it for the video.